coming home, I'm coming home. Tell the world I'm coming.
You're a medieval goldsmith in the 1600s, sitting behind a thick oak counter in a cramped stone shop, guarding sacks of coins that belong to merchants too nervous to keep them at home. He issues paper receipts for every deposit, promises that read, "redeemable in gold on demand," and for years those slips of paper circulate through the town as if they were gold themselves, because everyone trusts the goldsmith's vault. Until one restless night, he realizes something extraordinary. Nobody ever asks for all their gold at once, so if he quietly prints a few extra receipts and lends them out for interest, charging farmers and traders a fee for gold that was never actually taken from the vault, no one will ever notice, and this single, almost invisible act of deception becomes the founding sin of modern banking. The moment humanity discovered it could manufacture wealth out of nothing but confidence. Fast forward 4 centuries, and that same goldsmith's trick now wears a suit and calls itself fractional reserve banking, a system in which your local bank is legally allowed to hold on to only a small sliver of the money you deposit, often as little as 10%, sometimes even less under today's relaxed rules, while lending out the rest to someone else who deposits it in another bank, which then lends out most of that too. And so a single $100 bill can multiply itself into nearly $1,000 of money scattered across ledgers and spreadsheets, meaning that when you check your banking app and see a comfortable balance, you are not looking at money sitting safely in a vault. You are looking at a number, a digital promise, an IOU, stacked on top of other IOUs, because more than 90% of the currency circulating through the global economy today is not physical cash at all, but purely electronic entries, created the instant a bank approves a loan, conjured into existence with a keystroke rather than printed by a government mint. This is why economists sometimes call modern money debt with a good publicist, because the entire system survives only as long as new borrowing keeps flowing in, since every dollar of money was originally somebody's loan, which means if lending ever truly stopped, the money supply itself would begin to shrink, and the whole architecture would groan under its own weight. A financial house of cards that cannot simply stand still. It must keep growing, keep issuing new mortgages, new credit cards, new corporate loans, precisely to service the interest on all the debt that came before it, trapping entire nations in a treadmill where stability actually means constant expansion. And this fragile arrangement is not merely a domestic curiosity, it is also a geopolitical weapon, because the country that controls the world's reserve currency and its lending institutions effectively controls the oxygen supply of the global economy, deciding through interest rate policy and credit access which nations flourish and which quietly suffocate under debt they can never fully repay, which is precisely why central banks, sovereign wealth funds, and rival economic powers spend so much energy jostling for control over currency systems, gold reserves, and alternative payment networks, each one racing to reduce its dependence on a banking structure built, at its core, on a promise that cannot always be kept. Understanding this is not a call for panic, but a call for clarity, because the ordinary person is not powerless inside this system. You can begin by recognizing that cash in your pocket carries no counterparty risk the way a bank deposit does, that diversifying your savings across different asset classes, rather than trusting a single digital number, protects you when confidence wavers, that assets which cannot be conjured from nothing, whether that means productive land, essential skills, physical gold, or carefully chosen investments, tend to hold their footing when purely paper promises begin to wobble, and that staying informed about how money is actually created, rather than how we assume it works, is itself a form of financial self-defense, because in the end, the goldsmith's oldest trick never really disappeared. It simply moved from a candlelit vault into fiber optic cables and server farms, and the only real difference between then and now is scale. So the question worth carrying with you long after this video ends is not whether the system will one day face its reckoning, but whether you will be standing on solid ground or on borrowed paper when it does.